Hey, welcome back. This is Mr. Market. We are now into our sixth episode. Thank you so much for joining me. This past week, the market has been nice and strong again. Actually, the market's been kind of on easy mode and it's just been going straight up ever since the beginning of the year. For our portfolio, we've been able to take part and we were up about 2,400 for the week, bringing our year-to-date returns past the $10,000 mark. So hooray, but given how markets don't always just go up, there does tend to be some mean reversion. I'm a little bit more cautious this coming week, especially since we have the Federal Reserve coming up with their interest rate decision on Wednesday. And also this week, we have some of the biggest technology earnings that can really drive the market sentiment. So we're going to have a lot of the FANG names, the Facebook, Amazon, Apple, some of those big names. They're going to be pushing the market around based on what their guidance is going to be. Interestingly, a lot of what has driven the market this year is short covering. So a lot of the most beat up names that we saw last year, they have come back really hard. Like, for example, Tesla. I believe they are up about 64% year to date, somewhere around there. And it's almost at $178 now. Now, did you notice that I put out an alert on the YouTube Shorts? I put out this 10-second alert giving you a heads up that Tesla had broken out of its downtrend. And it was trading at about $130 at that point. And I did make a little bit of a trade there to make a little bit of money. But if you go back to my second episode back on January 5, that was episode 2 when we were talking about trend lines, we were saying how it was important to be waiting for that downtrend to break. And when people see that downtrend break, that's typically when traders will pile on. And that's exactly what happened again. So history is repeating itself, especially when it comes to Tesla, because a lot of people do like to pay attention to the fundamentals, not so much the fundamentals, but the technicals. And that brings up a funny quote that I had in mind. Look, there's two kinds of traders out there. There are the ones who respect the trend, and there's failures. And if you don't respect the trend, you are going to fail because eventually you're going to be either left out of a move or you're going to be fighting the trend and your losses will accumulate. So super important to be paying attention to the trends. And that's why the trend line is the most powerful indicator that we should use. And I think it's highly underrated. So go back to lesson 2, or rather episode 2, and have a look at it. I'm too lazy to go post the link, but take a look and hopefully you'll see some of these lessons repeat itself over time. So I wanted to talk about the interest rate decision coming up this week. It's a little bit of a problem for me because we're going to have a little bit of a divergence here where what the market is saying is that the Federal Reserve will top out at this level and eventually cut by the end of the year. Whereas the Federal Reserve said, no, we've made it very clear interest rates are going to sit about near the 5%, 5.25% level, and we're not going to cut. And, who are you going to believe? Are you going to believe Jerome Powell, aka J Powell, who should probably be called K Powell because, that's the sound that he makes when he kapows the market and, horribly disappoints, all the market participants on a Federal Reserve pivot? He is probably going to stick to his guns and say, look, this is what I said. We're going to be keeping interest rates at these levels. And if he does that, the market is going to be disappointed. And just like what happened in December, the market took a pretty hard fall. I am being cautious because of that. So around the Federal Reserve decision, I'm probably going to pare back some of my bets, or at least stay wide and stay small. And I'm not going to be chasing the market. If December was any hint of what can happen again in January, or rather now that we're in February for this Federal Reserve decision, there might be some opportunities that open up on Thursday or Friday to open some better positions after the decision is released. So that's my game plan for this week. Start to play chicken right around Tuesday or Wednesday, right before the Federal Reserve decision, make sure my positions are wide and far away from the market. Currently, my bets are that the market will not go above 420 and it will not fall below 390 by Friday. But a lot of that can change. My goal here is to move with the trends of the market. The pendulum algorithm is still very bullish. And if it reverses, I'm going to have to respect that and play defense. So that's all we've got for today. We have a big week up ahead of us. I wish you the best. Wish me luck. And one last thing, please click like and subscribe, and I will see you next week.